India has always had a complicated relationship with its bank. Most of us have a story. A loan which actually took a lot of months, a huge trail of papers which have been filled again and again. For the 63 million small businesses in India, the problem isn't inconvenience. The problem is existential problem. Over the last decade, a lot of digital infrastructure has come up and has been built from ground. And for the first time, the question isn't that technology will reach last mile or not, but how fast. My guest today is someone who has been in the middle of this since 2017. He's a co-founder of ScoreMe Solutions, which is actually a fintech company which deals in creating a paperless credit assessment. He's not a banker, he's not a regulator, he's actually a builder. Someone who understands the infrastructure from inside. And that's exactly the kind of perspective I'm looking at. Hi Shashank, thank you for joining,
Hi.
giving your time this morning. Straight away jumping into, right? Just take me back to a point where you were trying to solve a problem in the structure and it actually broke you.
All right. So I'll go back 9 years.
Yeah.
And while we were trying to address one gap, that, which is the backbone of the country for MSMEs, back then, if a MSME had to take an advance from any of the lending institutions, there was a phenomenon on credit rating to be taken up for loans beyond 5 crores. And even for loans below 5 crores, there was a huge activity in terms of data sharing, data accumulation, and analysis of the data. So, this entire chain was roughly around 21 days to 40 days, depending on the size of the case. We explored one gap in this particular fragment is that there is a lot of structuring of the data which is to be done.
Yeah.
If that structuring can come into effect, that analysis can be provided through a digital channel, we can squeeze in these 21 to 40 days, so maybe 5 to 6 days of a time frame. But when we started, we effectively made a credit scoring pattern which would tell the MSME that what is the likely rating which they are about to get when they go out in the market.
So does it actually prepare those MSME before they're applying a loan?
Yes, it used to do that.
Okay.
That was the intent. But what we did, and it came back to us was that model had roughly around 60 to 70 different inputs from different sources. Like, we take some inputs from bank statements, some inputs from your balance sheets and profit and loss statements. And for most of the MSMEs, these documents are not very structured back then.
Absolutely.
So it used to, come into effect that we were taking a lot of to and fro in terms of communication from these MSMEs, and even the lenders also used to do the same. So we tried to bridge this gap, that how can we back calculate these 70 parameters. And if we just take the document and a system is able to automatically pass the information and accordingly benchmark to the thresholds which are available as per the lenders, and make a readily available document for the lender, instead of MSMEs or any borrower required to input any data or share any specific conversational data with the bank. It's a system which is reading all of this on behalf of you and giving it to the lender.
So was actually acting on behalf of MSME is what you did.
Yes.
Great. I always feel that digital India, when you talk about digitizing everything, it's great on paper, and I see you got dashboards, you got UPIs and everything. But actually, I want to understand and walk me through a case study. If there's a farmer sitting in, a tier three city or a village in UP, if he goes today to apply a loan, walk me through his journey.
Sure. So today the farmer, number one, is he doesn't have to go anywhere to take the loan.
Okay.
That's the first and foremost paradigm shift which has come in the last 3 to 4 years. Now, be it a farmer, be it any individual or even a MSME, you don't need to step out to take a loan. And more or less, all the credit institutions are heavily investing on digital lending platforms. We are sitting in an advent where government has taken a lot of initiatives to set a lot of DPIs in the country. And with the advent of these DPIs and data becoming digital, which was not there back then, and you had to step out, or any farmer had to step out. For a farmer, it's very important that how does the lender take into account the daily produce data, what is the daily earning activity of any farmers. That's where we bring in DPIs, which UPI has transformed for them. Uh, Today, a farmer can give a realistic cash flow statement to any of the lenders, and that is also not a document which is to be given. It is a simple one time consent through an account aggregator framework. So, what I've talked here is we have talked about UPI, giving you digital footprints in terms of the transactions which the farmer has done. We're talking about an account aggregator, which is again a digital infrastructure set up by the government to pull data from one institution and provide it to another institution. And we are also talking about the next step, which used to happen was that the farmer had to go and take, let's say, a land record verification.
Yeah.
So he has to put in that this is my land, this is my parcel
Absolutely.
of land. And then the bankers used to,
Validated, right?
validate it, do a technical feasibility around it, and then come up with a limit. And that too for a very small piece of loan which the farmer is going to take. With the advent of satellite imagery analysis, what we are able to do is we are able to capture the land parcel digitally, geo-target, and also benchmark it to what kind of produce this land may give. And once that data is backed with the UPI based cash flow cycle, the lenders today are having a confidence that based on this data, we can extend the first line of credit to this farmer. So, which means that I have to provide one OTP to start the journey, another OTP to give my consent to the lender that I am okay to share this data with you. And maybe, in the next 1 minute, 1.5 minutes, I am ready with the offer for me.
So, explain me two things. Is actually farmer educated enough to not get into this complicated system and then two-step verification today?
So that is where the lenders are putting in the most effort. They are trying to penetrate more and more into tier 4 and the rural India part. And interestingly, what we have observed in the past is that the penetration of adopting to digital ecosystems
Yeah.
have been higher in the rural front. In rural
Interesting.
India, the rural youth has been 87% adoption versus 74% in urban youth. And this is the age band of 18 years to 24 years, what I'm talking. And mostly, in these rural state areas, now we are finding this shift coming towards getting to know about digital solutions from the bank. And these are also getting imparted in a way where even if the bank is making an effort to go to the farmer,
Yeah.
the conversation is all happening through a digital device.
Okay.
There is no paper exchange which is happening. So that's where we say that the credit is now paperless.
Interesting.
So farmers, more with that word of mouth, they are now spreading it to their peers that now there is a digital solution available. We just need to take a conversation there, which will help us to do an end-to-end decisioning for the loan which we are taking up.
You mentioned a call as DPI. Can you explain me what DPI actually means?
So DPI is digital public infrastructures,
Okay.
which has been set up by government in terms of with a revolution on digitizing the base level data in the economy. We can talk about DPIs like UDI, which was set up, which was an attempt to digitize my social citizenship in the country. Then we talked about DPIs like UPI being set up. With these, I would say, digital infrastructures, now the government is planning hard to connect all these DPIs through a one single pipe.
Okay.
So that's where a lot of data gets digitized, and
Fair
it's since it is getting digitized directly by the apex body, so that helps everybody to leverage it, whosoever is in the regulated entity space.
Great. You talk about digitizing everything, right? And that rings me a bell at every time we see a new digital solution getting implemented or integrated. It creates a lot of risk as well. There are risk of fraud, there is risk of data breach, there is risk of data leakage. I want to understand in this whole consumer journey, who's actually protecting that?
All right. So it goes right from top to down. If I talk about RBI getting cautious around the entire data frauds, and in fact, a lot of digital frauds getting reported. We are sitting at in 25 more than 24 lakh, crores digital frauds, which is there in terms of the overall transactions getting related to it. Uh, RBI has also set up, a free AI enablement body, which tracks mule accounts today. Uh, at companies, I would say digital adoption, we technology service providers as ScoreMe are also putting in a lot of effort to analyze certain patterns in the data which is coming, so that fraudulent activities can be reported right before at the time of happening. And with regards to data security, I would say there is already a lot of activity which is happening in the financial ecosystem with DPDP coming into effect. Soon we will have a lot of consent managers who will be required to take complete authority and control of what data am I sharing with, what purpose it is for, with which specific institution this data is getting shared.
Interesting.
So I will have, as a consumer, I will have the control in my hand that why I am sharing the data. Today, data being shared with one party, I happen to give a consent, and that becomes a recurring consent for anybody to
Use it
screen
and
my data, use this for internal analytic purposes. Going forward, this is going to change.
okay.
With this DPDP coming into effect, this is very strongly getting advocated, and I think November of 27 is where the timeline is for this to get implemented across the country. Hopefully, we are also seeing a lot of traction in this entire space on how consent managers are getting involved. And even when we talk about account aggregators getting set up, with the account aggregators also, the attempt was this, that how do we prevent security of the data? So again, the apex body came into effect. RBI set up Rebit, which is the IT arm of RBI, and they are controlling this entire exchange of data between one institution to another institution through a completely, I would say, secured framework. And hopefully we will see other data points also getting covered in the account aggregator framework. Currently it is being adopted for financial data only.
Okay, fair enough. You know, I always believe that, to me, before this session, I believed that banks always have this credit solution team integrated. I want to understand, as ScoreMe, what are you guys actually doing differently, and what do you see as a broken element in the current structure?
That's a very, I would say, relevant question in terms of everyone's understanding is that, when it comes to underwriting or a credit evaluation, my credit bureau score is something which is only required.
Yeah.
See, let me just clarify this gap here. So, your credit bureau score is something which is based on your historical pattern of transactions with all financial institutions getting reported to different CICs, which we call credit information companies. So, we have four credit information companies majorly in India which operates. These CICs give your bureau scores to a lender whenever you go and approach them for any kind of lending activity.
Okay.
But you are also doing a lot of transactional and alternate digital footprints on an everyday basis. So what I'm trying to solve here at ScoreMe is we are trying to analyze this entire alternate data, which might not be a reflection in the credit scoring or the bureau data which is coming, which will come from your daily transactional patterns, your I would say presence in terms of your if I talk about a MSME, for MSME their commercial CIBIL score or a commercial bureau score is something which is just a reflection of their historical background. If we compare GST data, if we take bank statements data, and if we take ITR data, these are becoming real time cash flow analysis methods. So in the banks also, they used to have a traditional turnover based method to I would say evaluate and assess any borrower.
Yeah.
Now banks are taking a shift. They are going to more of a cash flow based method.
Okay.
So instead, they are looking at a real time transactional behavior instead of looking at how the balance sheet and the bureau score is performing. So it's very important for an individual to understand that your bureau score is not the only barometer which will be looked upon today. It is one of the barometers in the complete scoring analogy of the bank.
Okay, fair enough. You know, I always feel as an individual that if a tool or if a machine decides your creditworthiness in couple of seconds, we tend to lose that interaction between human, a borrower and somebody who's applying a loan, right? A human interaction gets disconnected between a lender and a borrower. Is it something which we are actually missing in this whole piece?
Well, I'll answer this in two parts. One, let's take the retail agri MSME borrowers, for any institution. They are the ones who are tied up with their daily activities. They really don't have that time and the bandwidth. And these type of borrowers are looking for very templatized products of any institution. These borrowers will look for a product like a working capital or a term loan if I am an MSME. I will go for a housing loan or a car loan or a personal loan if I am a retail borrower. Or maybe I will request for a credit cards or any other services which are there. Now, these services are getting very, very structured in nature. These services had very less human intervention back in the years also. Today, these are getting almost, I would say, obsolete in terms of any human interaction. It's completely digital solutions. So, for the smaller set of borrowers, this interaction, yes, it is important. That is where the second part comes in. So, banks, how they are planning is they are designing their products in two ways. For a very low ticket size borrower, they are completely making an STP process, which is a straight through processing.
Okay.
There is no manual intervention. For products with slightly on the higher ticket size, if I give it a ticket size of let's say 50 lakhs and above. So today there is one element of manual check, but that manual check is digital today. That is what has changed.
Okay. So there are still checks, but still got digitalized.
Absolutely. And if I talk about for loans with ticket sizes of more than 5 CR and above, they will involve some kind of structuring on the deal. Over there, technology is an enabler. Technology is helping them to analyze a lot of data, but still the decision is happening with multiple connections getting linked into a single framework. So I would say that less than 5 crores is one bracket where you are seeing STP journeys for up to 50 lakhs and 1 CR. More than 1 CR to 5 CR is your assisted mode, which is digital. More than 5 crores is still, I would say, that human intervention is there for the structured finance solutions.
Great. It's been 9 years that you have been building this journey of ScoreMe. What has been the greatest learning and the toughest decision you had to make in your whole journey?
Well, the toughest decision I have to make is every day morning because every day morning when you wake up, you see something new which is coming up, and with this entire advent of artificial intelligence and technology getting changing so rapidly, it becomes literally impossible to have a roadmap which is for 6 months or 1 year. We are breaking our product developments into small stints and sprints of 2 weeks.
Yeah.
So you can say that every 2 week there is a new cycle of new use case getting evolved, new products getting launched, and with this comes the greatest opportunity of being on top of how different data points are talking to each other, how we are trying to analyze information between different data points, and at the end of the day, how is the end consumer getting benefited out of it. We have talked about solutions that will analyze the data for the lenders, but if I talk about use cases getting digitized, so we have seen a huge penetration in terms of a small use case which a small consumer will not even understand. You try to make a shopping from Amazon, and while you are at the checkout stage, you used to see an EMI options getting linked to your cards. Nowadays, from Amazon, that has moved to your daily used e-commerce applications also. That how is it that right at the point in checkout, you are suddenly given a prompt that would you like to convert this into EMIs. So what are we trying to say is that for the end user, this is an embedded finance use case where finance is getting embedded into your normal use technologies. Now, while we are trying to create these embedded finance solutions, this is also backed by a lot of data analysis in the background. So we try and attempt to make these type of use cases, make life for the public. We have constant conversations with all the lending institutions on how do they want to solve this problem of reaching out to the last mile. Another problem which we are also trying to address is that within the banks also, in the 9 years, we have seen that apart from lending also, there are a lot of ancillary activities which can be digitized. I mean, imagine an MSME customer who is maybe having a locker with a bank, or a retail customer who is having a bank account locker. We used to visit bank every time once a year to renew that locker for us.
Correct.
Now, a lot of banks have now digitized this entire process. We talk about old age pensioners.
Yeah.
For them, re-KYC is a major problem. That you have to go to the bank to report that this my KYC is active and up to date. So banks are making re-KYC solutions. With regards to corporates adopting these technology solutions, you have a new employee joining into any firm or an organization. You used to do a police verification and a background check. So background check today is possible completely through a digital channel. If I talk about lending, which has any which ways changed, for the liability products, for account opening, for any use case in the bank, today there is a digital solution. So I think in the last 9 years, we started from a point of small data points getting analyzed at every point in time, getting amalgamated into a complete end-to-end digital technology and a transformation infrastructure, which today is taking its roots in terms of different use cases coming up for the end user. You will have a digital lending platform if I talk about loans. You will have digital solutions like re-KYC and locker agreement renewals if I talk about ancillary activities. You will have a digital account opening solution if I talk about your liability services. You will have embedded finance if I talk about out of banking solutions. You have background verifications for new employees joining in. I think this will keep on evolving, and with more and more advent coming in terms of the DPIs which we talked about, it's a new use case every day for me when I wake up.
Great. It's 2030, and walk me through a journey of a first generation entrepreneur sitting in a tier 3 city. How does a loan application for him looks like in 2030?
I think to answer it in very simple terms, it would look like a conversation we are having, where there is no screen involved, there's no banker involved, there is no human involved. You will completely have a voice-enabled lending system by that point in time, with technology taking its digital shape to the maximum extent. You will have bots, conversational bots to talk with. And these conversational bots will not be limited to just retail borrowers. These will be also available for MSME borrowers.
Okay.
So as a business owner, you are sitting in your office and you're just having a conversation with a bot, which will analyze your data and ultimately give you the advance which you're looking for. So for me, 2030 is where there is no human involved. The only humans which are involved is to manage the solutions in the back office, but not in the front running activities. So it will be more or less a voice enabled lending system by that point in time.
That's a great insight. And, that brings to the end of the session. Thank you so much for giving me that much of insight. And I believe this would help people to understand how money is actually moving and how money will move in the future. So thank you for giving me time.
Thank you. Thank you for having me here. Thanks.